Hello, let's take a look at my bearish and bullish options for Bitcoin, starting with the bullish option where we have a leading diagonal 1, 2, 3, 4, 5 into wave 1. All of this is wave 2, and then we are looking for wave 3 and 4 and 5 and so on, looking for higher prices. Then we have the other bullish scenario where we are counting this as a 1, 2, 3, 4, 5 into a wave 1, 2, and then 1 A, B, C into a wave 2, and now a leading expanding diagonal 1, 2, 3, 4, 5 into wave 1, 2, and now looking for higher prices. After that, we move on to what I like to call a bull-bear scenario. It's basically a bearish scenario in the long run and bullish in the short run. So here we're looking for ABCW, ABC into wave X, and now something in wave Y. And that something has a higher probability of being a flat. So maybe A, B, C, and then the finishing wave C to finish wave Y, which means moving up in there. And after that, we are looking for lower prices, taking out this low. Then we have the finished WXY, finished zigzag, double zigzag. And now we're looking for 1, 2, 3, 4, 5, leading diagonal, wave 1, 2, 1, 2, 3, 4, 5, 4, 5, and so on, looking for lower prices. And an option to this bull-bear scenario is the scenario I mentioned in my previous video, where we have a W, A, B, C, D, and now looking for wave E in a triangle. And if we have a W and then X, then we need a wave Y. And if this is a triangle in wave X, the probabilities are extremely small. I think I read that they have never seen a double triangle in a combination, meaning that it haven't been seen at all to have a triangle in wave X and then a triangle in wave Y. That it is that rare, or I mean, it's not registered anywhere that anyone has ever seen it. So therefore, it has a higher probability of being flat, because you can't really have a zigzag in this scenario. You can have a zigzag, but we touched the 70 fib line, which means that it has a lower probability of being a zigzag, which means in turn that we have a higher probability of having an expanded flat. And an expanded flat is a more common structure than a regular flat. So therefore, an expanding flat is the most probable scenario, meaning that we are basically looking for a little bit higher prices, but after that we are moving down and taking out the low. So which one of these have the highest probability? Yeah, I discussed this a little bit just now, but this, as I mentioned in my previous video, this has a low probability of being an ABC in that wave 3, meaning that this whole structure has a low probability. And also a leading diagonal in itself has a low probability. It has the lowest probability of the impulses. I mean, an impulse, highest probability, a 1, 2, 1, 2, second highest, and then a leading diagonal, the third. So it has a lower probability, and also, as I mentioned, this ABC is not looking good. I mentioned that in my previous video as well. But still, it is an option, and we need to be aware of it. And here, if we touch this, it's even lower probability for a wave 2, lowering the probabilities overall for this scenario. And if we take out this is the invalidation for this scenario. And then we have the 1, 2, 1, 2, basically the only thing that is keeping the bulls alive. So 1, 2, and then 1, 2, and now looking for a 1, 2, 1, 2. And I must say we didn't start off very well with an expanding leading diagonal, which is the most uncommon structure. So that is something to take into consideration. And also I mentioned in my previous video that this wave 2 is so much bigger than this wave 2, which is not really what you want to see in a 1, 2, 1, 2, lowering the probabilities as well. And also if we touch this, then this wave 2, this wave 2 has a lower probability, meaning that this whole structure has a lower probability, because if this has a lower probability of being a wave 2, then we need to count this as a 1 A, B, C, WXY kind of structure. And if we take the time here, you can see that we are approaching 300 fib time, which is very uncommon for a wave 2. So that is basically the only thing that the bulls have going for it. And now I see, when I'm doing this video that we are approaching that line. So yeah, it's not looking good for the bulls. Otherwise, all of these structures are possible. The WXY and the finished WXY, it has a lower probability just because it's a leading diagonal, meaning that it's a higher probability of being something else, meaning that it's a WXY or this kind of structure, WXY in that kind of sense. So to sum it up, basically, it's a higher probability to take out this low, and it's a higher probability that we are at least continuing to range in a sideways flat or something like that. And it's the lowest probability of just taking off and for looking for higher prices. So yeah, the bias is looking for more downside before we have more upside, basically. That was it. I hope you had a great day as well.